Hey, very good morning. Friday, 24th of March. Just going straight into the charts. I can see on the top left, Euro just touching that R1 now, and another little break there. You can see probably there's a light stop just tripped around that point. Again, quite an aggressive move here in the Euro this morning. Very much dominating proceedings here to get the Friday session underway. DAX as well has seen a little bit more of a mild move. Now, probably, well, first of all, let's talk about the reason why this has happened. Then I'll explain probably why the DAX move is a little bit more contained than the Euro. So, we've just had some data come out. Let me just quickly, we'll go over that first before we look at the other news. So, looking at manufacturing PMIs this morning. Now, this is why preparation is really key. And when you're looking at the kind of planning ahead the day before, you should know by now that the PMI data is tier 1 information. It's important economic information, and it is going to have an impact on the marketplace. So therefore, you know that pretty early on you're going to have to be engaged in the market, mentally prepared and ready to go right from the get-go. Now, what you've had was, well, it comes in chronological order. You actually get the French numbers first, so let's have a quick look at those. And they both exceeded expectations, both manufacturing and services. You can see here comfortably printing and consistently in expansionary territory. That's that above 50 reading. And then in the case of the service number in France, we're almost knocking on the door of 60, which you kind of have to really go back towards 2011 to when we were last at that level. Then that already sparked a bit of a move higher in the euro currency. Then comes the German figure at 8:30, which obviously people put a greater weighting on given its proportionate value for the economic performance of Europe. And again, the German manufacturing data came in at 58.3. That was above expectations of 54.6, as I said at the time of the release. Very few times I can remember in recent memory that I've seen that figure beat estimate by almost 4 points. And if you look here, if we have to stretch out the timeline, you're looking at that's the most solid figure we've seen from a similar time frame from that French service figure. So extremely strong. And the service figure in Germany, probably not as quite as important as the manufacturing side, but still up at most elevated levels we've been in some time. So looking at how the market's taken this, obviously the euro has taken a shot in the arm in terms of shooting higher, almost like a steroid injection to the upside. And so we've gone, what you had here was the French number. When the French number was coming out, let me just shorten the time frames a little bit. So 5 minutes. So this move in the euro, if we break it down into really two sections, you had the French reaction and then you had the German reaction. Now this, as you can see, proportionately is larger on the German one, which is, as we said, because of the reasons of the country and its output and its importance level for that reason. So you get a bigger move out of it. Now, what was interesting here is that we were trading, so around here, when just before the German number came out, we were talking about potentially what you might have is an opportunity for a classic long, which is kind of that 101 of how we like to trade here at Amplify. And it came out very strong number again. We popped higher, it came back to the level, and quite pleasing to see. I think I saw at least about 12 of you go long at that point in various different sizes depending on your experience. And then as we came up, you can see then as we were talking about the move as it was occurring, you were looking at that kind of range that we had defining the top side from yesterday afternoon for much of the session. It got to that point. And it was also good to see that you guys then trimmed down some of that position, booked some profit, knowing that, and you actually saw it in the price, as soon as it got to that level, there was a momentary hesitation for about 30 seconds before then it pushed up again, up to R1. And now we're at that level where we're pretty much to the tick at the high that we saw very early yesterday morning. So now pretty much out of that trade. So you've got a clear run here from pivot to R1, and that's just a nice start to the morning. That's kind of about as when you talk about the trades that you guys were in possibly yesterday, when you've got a lot of indecision, a lot of volatility on those Trump headlines, the tweets coming out, the market's very whipsaw, no real direction. This move this morning is about as 101 as you're going to get. And so, it's these kind of opportunities that, need to become, that kind of, you've got to have confidence in taking those when they occur. So good start, guys. Well done. Nice to see that you all kind of followed the same strategy there. Now, when you're looking at the euro currency, what's interesting here is the euro is still sitting up and around its highest point after that figure, but the DAX it hasn't really bought into it. Now, a couple things to keep in mind here. So the DAX did gap up this morning, so we're already trading higher from the initial futures open. We just had a little run higher after the German number. That's that wick that's quite large, you can see on that last candlestick there, before we've now come back to pretty much exactly where we were pre-release. Now, if you think about it, what does extremely strong data from the likes of Germany and France and manufacturing and services, what does that mean from an ECB point of view? What it means is that this whole idea of raising interest rates, about tightening policy, about removal of accommodation, about taper, all these things, that obviously jumps to the forefront. Now, what does that mean for the euro? That's pretty binary. That's a strong economy equals the fact that likely inflation is going to pick up, likelihood then they can get a little bit more aggressive with coming out of this accommodative stance. That's a little bit more binary euro strength. Hence you get quite a decent clean move upside in euro. Whereas for the DAX, what does tightening policy mean for equities? Not so clean cut. Because yes, the initial reaction might be positive, like we saw with the DAX initial reaction. It's like, wow, what a great situation the German economy is in. Then all of a sudden you think, what does this mean for ECB policy? This kind of punch bowl of accommodative period that we've had for so long is about to get removed, and the equity space has always historically reacted quite negatively to that, if you see what I mean. So the move in equities then, not quite so binary as the move in the euro. This is when you've got to be thinking about which asset to trade in these certain situations to get the most bang for your buck, if so to speak. Now that's not saying you couldn't have gone long in the DAX there on that German print, but you've got to be a little bit more realistic about your target and where it's going to go to and the kind of longevity of that trade. The euro one was a lot more clean. You can see technically the kind of entry exit points made a bit more sense, and so that was probably a lower risk trade all in all. So that kind of makes a bit more sense about the divergence and why the DAX probably isn't the one to trade in that type of scenario, unless you're being pretty quick in and out. Now, the one thing I would say is that the euro then overall has seen a move of about 30 pips on the back of this. Now, technically, we've obviously found a bit of resistance, a bit of a turn off the high here. Be realistic now. Trying to get a classic long off R1 or the previous high to go long again. You're talking about a move then that's probably a greater magnitude than what it actually warrants and what we've seen. Don't get greedy now. You've had a good trade. That move's happen, and it's done. Now we move on. Okay, getting you up to speed then with some of the headlines. Let's have a quick look at what else has happened. Obviously, yesterday, bit of a tricky session overall, because, as we said, the toing and froing of all these different Republicans, politicians coming out on Capitol Hill, one saying one thing, another saying something different, even the same guy saying something different about 30 seconds after he said the first phrase, causing quite tricky conditions to manage. And the one thing actually that when I'd say that you're newer or less experienced in the marketplace is actually, even for someone like Will and I trying to make sense of some of the market moves yesterday was difficult. And what it should tell you then is that maybe the best course of action is to stay clear and just actually not be involved unless that there is a clearer defined opportunity that does arise. Sometimes you got to know when to pick your battles, and I think certainly yesterday, the way that information was coming out, you had a pretty quick trade you could have got off in the US indices on the back of there's one politician commenting about the fact that a deal is pretty much 95% done, very quick fast money move, but then he came out himself and pretty much about 2 minutes later said, but there's still a lot of work to do, and then it reversed that move. So again, kind of very quick whipsaw price action. But the Trump and the healthcare reform still the major kind of overall driver of these markets, despite the momentary kind of turning towards this European data. The bigger driver still will be this healthcare reform. And so, as you can see here, a very stressed orange-looking person. He's obviously becoming under immense pressure at the moment. Donald Trump warning Republicans to pass a new healthcare bill on Friday or risk being stuck with Obamacare, essentially. So pretty much, this is the key here, the ultimatum. Trump, in the way that he seems to chair meetings, the way he tends to talk and negotiate, he will know full well how important this is to go through in terms of a benchmark of making a rubber stamp on his early presidency that he is a man of action and he can achieve the pledges that he made in his campaign. He'll know that full well. And essentially what seems to have been the case now, he's basically saying to his own Republican Party, an ultimatum: you either follow me, or the kind of the main campaign angle or of the Republicans, we get basically shown up and Obamacare, and it's bad for everyone. So you're doing a disservice to your party unless you get this through and you follow with it with me. That seems to be the angle that Trump's trying to follow. Obviously, it's quite confrontational, but will it pay off or not? We don't really know at this point. And timings-wise, it's still not clear. Now, Trump has said that he wants to pass the healthcare bill today, i.e. Friday. Now, the ultimatum to Congress sets the stage then for a showdown with his own party, Republican leaders insisting that they'll push ahead with a vote to scrap Obamacare Friday, having pulled it yesterday. Replacing Obamacare, obviously, as we just said, is a core theme of Trump's campaign. Now, that doesn't mean that it will happen today. Don't forget, it was supposed to happen yesterday. And as I was saying in the afternoon on Thursday, talking to a couple of guys in New York, their kind of sense of things from the market chatter on the northeast coast is that this could well not even get resolved until Monday. So what does this mean in terms of preparing to how to tackle this market today? I would say you're probably going to get a repetition of what you had yesterday. Very mixed signals, counteracting comments from different politicians. All this is going to create is tricky trading conditions. Obviously, the headline you're looking for to execute the most simplest trade is a deal is done, we're going to vote in 30 minutes. Something as clear as that, then you're going to see a pretty big rally, probably in the equity market, and the dollar yields will probably also start to move higher, so T-notes will start dropping. On the flip reverse, if you get someone come out and say it looks like a deal is not going to get done, we're going to have to revisit this large-scale disagreement, and then you might get some selling going into the close of the week. So it's kind of, you need something clear on either side, but I think actually it's just going to be a repeat from Thursday. Quickly, I did send this out to you this morning, some of the main points of what's next for the Republican healthcare bill. And the reason I've sent this out is because I know we've talked about it a couple times, and I've been writing about it in the strategy, but I really want it hammered home about what exactly this bill is and why it's important. So this document from the FT just kind of summarizes all those main points. But again, the main crux of the matter here is the GOP has a majority in the House. That's 237 seats, adding up to more than 216 votes needed to pass the bill, i.e. today, if it happens today, that is. But party leaders' margin for error is not that big. If they lose more than 21 seats of their own members, they fail. Hence the reason why Trump was in these meetings with the Freedom Caucus yesterday, trying to cajole them into joining him. So be looking out for source comments on that. And that's the kind of key number that you're looking for. So the 216 needed to pass and the kind of margin of error of 21. So when you hear yesterday they were saying there's about 30 to 40 people who are still undecided or not looking to back Trump, then obviously that's a far cry from the 21 that they need to get it down to before then it becomes more serious that it's going to go through. What has this led to then? This is quite interesting, and it kind of, I guess, encompasses the big sell-off that we had on Tuesday. But US stock funds have suffered their largest redemptions since the Brexit vote in June because of the healthcare reform floundering, basically. Donald Trump's inability to get everyone on side internally in Congress to back his reform that he wants to do on the healthcare bill. So the S&P has slid for a fifth time in the past 6 days. Obviously, we were getting the reverse for such a long period of time with incremental increases to these record levels only a few weeks ago. Now, putting this into actual monetary terms, or monetary, funds invested into US stocks recorded $9 billion of withdrawals in the week to March 22nd. That's the largest weekly redemptions since the EU referendum, essentially. So what does that look like? If you start looking at it in a chart, US stock funds suffering their largest outflows here since you've got to go all the way back, that we've not seen such aggressive movement back into selling positions since all the way of last summer of 2016, when obviously we had that shock referendum result. You can see the opposite following the US election, absolutely piled into equities on the back of that promise of this fiscal stimulus that was going to be forthcoming from President Trump. That was when the market just springboarded to the upside, and we saw that really aggressive rally immediately post the election. But the absolute opposite is happening right now, and this is not just because the healthcare reform itself singularly is important. It is, but what this is all about what does the market then perceive Trump's ability on those fiscal elements to come later down the line. If he fails here, does he fail there? That's how the market is viewing it. And at the moment, obviously, the fact that this hasn't gone through yet, the longer it goes, the more negative the connotation will be kind of perceived in the market. Obviously, then this has led to a pickup in volatility. This is the VIX index, so something which you've probably heard about before, but the VIX now at its highest level for the year. Obviously, we had the big waves higher when we had the Italian banking crisis. Deutsche Bank was getting, will they need a bailout? This was kind of September time, I guess, of 2016. We were way above that kind of key metric, which is deemed as the kind of fear gauge. That level of 20 is kind of the one people refer to. We got above that point back then in the banking crisis. Then you had the referendum, which was obviously elevated during that period. We are nowhere near that at the moment because we've been actually near record low levels in the VIX on this gradual upward trend to record highs on the Trump trade. But now things are starting to liven up a bit. And you can see that even French political risk as well as probably playing a smaller part at this present point. But the Trump, the market's been so driven by that theme for a number of months. Any signs of that dissipating is going to prompt this to move back higher. Also coinciding, obviously, triggering of Article 50 next week, and then the French elections upcoming. There's plenty of reason to believe that maybe this is going to see some upward movement going forward. So we are now up to 13.12. First time we've closed above 13 mark since December 30th, according to FactSet in the VIX. Okay, quick look at some other headlines then, just to wrap up the briefing for this morning. We've just had the EU manufacturing PMI and service number come out just as we've gone through 9 o'clock. As expected, there's been no impact in the market. Again, that's because all it is basically a summary of its parts. We already know France and Germany, people have traded it, so net impact 0 on the European number, of which both measures, manufacturing services, were a beat. Unsurprising. Just going back then, a few other things just to be aware of. OPEC and allies gather as oil market warns them job is not done. So just so you're aware, basically there's a meeting already ongoing. Here, there's a 5-nation committee that was established to monitor the implementation of the accord. That was the accord that OPEC agreed at the end of November, so November 30th, when they had that compromise and production cut that they would push through. Basically, this is their committee meeting of 5 nations to just verify and check that everything is going as planned. Now, that's taking place on Sunday, March 26th. And so what you're going to be looking out for in the weekend press, and that may be something of interest for the Monday morning, is what were the discussions here, particularly in the context of US output continuing to increase at a fairly rapid pace. How do we get a more concrete sign out of some of these OPEC members that they need to put into place formal action already, or commit to it, on the expiration of the current existing agreement that's due to expire in June of this year? So keep an eye out for that. There could be source comments. I would imagine there's a possibility of that later on this afternoon that might come out as people start looking forward to this. I, for one, know that if I was a journalist working at Bloomberg, I'd be right on to my contacts at these various nations trying to get a snip comment from an oil minister, if I could, wanting to get the scoop before the meeting. So ultimately I'd be on the lookout for any tweets and source comments of that nature. Finally, Fed speakers. You've had yesterday Williams saying that 3, maybe more 2017 Fed hikes make sense. And then you've had Kaplan overnight saying that 3 rate hikes in 2017 and eyes the balance sheet. With the US workforce nearly employed, inflation heading towards 2%, the Federal Reserve should raise interest rates 2 more times this year and continue to plan to gradually trim its massive balance sheet. So nothing really that we've heard from the Fed speakers this week. I mean, there's been a bit of divergence, I'd say around the mean, if you like, of Fed communication, but overall it's still on track largely. And the market really hasn't had much to get its teeth into, maybe because as well there's a bigger thing ongoing, which is this whole healthcare issue and Trump and his plans going forward. Okay, a quick look at the calendar. Obviously you've had the big data of the morning, that's now been and gone. You get mortgage approvals coming up at 9:30. I must stress that is seldom market moving for the pound, so you're not looking for any kind of actionable trades on a piece of economic data. So the morning's actually pretty much done. And just looking at the way some of you have performed thus far, this is when, if you're becoming a professional intraday trader, you've got to know when to enter this market and when not. And when I started this briefing about 20 minutes ago, looking at everyone as a collective, you were more profitable than you are 20 minutes later. Yeah? And the market's, in my eyes, the market's done nothing. The trade has been, and the trade has gone. Now I can see that profits have been halved. I know this isn't everyone. Some of you have been disciplined enough to stay out of the market. You've had your trade, done. Job done. Now, pretty much, I look at the calendar, market's not really doing much. I'm just going to wait till the afternoon now, because the next biggest thing is the Trump situation. You've got to be disciplined. You can't think, I've had a really great morning, let your emotional state overwhelm you, and you're on a high, you're kind of right, I want to hit it now, I want to get back into this market. That if I look at T-notes, if I look at oil, if I look at the DAX, it's doing nothing. And yet I see a few people jumping in, which honestly baffles me. So I can't say enough for, remember, if ultimately once you guys move on to futures, you want to just be capturing those moments like this morning, and if you have some size, then that's just an excellent opportunity. You execute, and then you have that trade bagged and done, and then you look for the next equally kind of clean opportunity. It's this feeling of wanting to get involved. Maybe it's a case of missed opportunity, and you're looking at that move earlier thinking, wow, I just missed out. So I know you guys are going through the learning process, and I understand that, but I'm making these points to hopefully make you in retrospect think about more about what you're doing in your approach. Okay, gonna leave it at that. So enjoy your day ahead, have an excellent weekend, and I'll see you in the chat room for the rest of the day. Thank you.